everyone. I'm privileged to be your moderator for today's discussion on investing hydrogen, the opportunities and challenges. Please join us alongside our two wonderful panelists as we explore the exciting prospect of investors in investing in hydrogen as a future fuel. Let's uncover a little bit the potential and navigate through the challenges together. Allow me to introduce quickly myself. I'm Athanasios Grammatikopoulos. I'm working at the Catapult for the last 4 years as the leading the climate action innovation strategist and drawing my experience of 20 years in accelerating the energy transition. But now I'd like to give a little bit more space to the esteemed colleagues here, panelists, to introduce yourselves and share your perspectives on today's topic. Let's start with Louisa, please. Could you please tell us a little bit about who you are, who you represent, and a little bit the potential you see in the hydrogen investment space?
Right, great to be here with everyone. I'm Louisa Cilenti. I'm the managing principal of PH3 Capital Ventures. We're an up-and-coming VC fund in the clean maritime technology space. So I suppose sustainable fuels and all the infrastructure technologies and services that support the production of sustainable fuels with a special focus on hydrogen is very much part of our focus. I think it's fair to say, and I was listening in to the last session, although someone mentioned ports, which was great, that aviation fuel tends to get the kind of lion's share of attention when we talk about hydrogen. But shipping still offers the cheapest mode of transport by far and the lowest carbon emissions by tonnage of freight transported. And that is not going to change. But what does need to change is that the shipping industry currently uses 330 million tonnes a year of fossil fuels. We have to go green. So the shipping transition is very much dependent on hydrogen, whether as a kind of primary feedstock or as a direct fuel. But today, shipping isn't going to give that necessary impetus for demand. It's coming, but I think we'll be in the 2030s and 40s before there's real kind of rapid adoption for hydrogen. Just contextually, Deloitte, you may have seen, put out a really interesting report about net zero greenhouse gas emissions requiring expansion of clean hydrogen by 6 times where we currently are in production. If you break that down, that's an 18-fold increase in renewable energy production. And we come down even further, and that's an 8,000 times increase in electrolyzer manufacturing production. So as an investor, you sit here and say, is it possible? Can we make these enormous leaps? And my answer to that from an investor perspective is that all exponential trends have followed this pattern. We only have to look back to 2010, where wind and solar was 1.7% of the renewable energy mix. Next year, it's forecast to be over a third of the world's renewable generation, overtaking coal. Big yip, that. But not one living person forecast that growth. So I'm really excited about hydrogen and its potential, and I'll hand over to Rubina.
Brilliant. Thank you so much.
Thanks, Louisa. Hi, everyone. Rubina Singh. So, most recently, principal investor at Octopus Ventures, investing in Deeptech and climate tech. but left a few weeks ago and taking a bit of time off before my next gig. So as of now, I'm representing myself. But my background is in energy, starting as an engineer, then to an operator at Centrica for a few years, working on scaling, taking to market new low-carbon technologies and heading up the innovation division before I joined Octopus to invest in early-stage Deeptech. So in terms of hydrogen, I'm very excited about hydrogen, mainly for three main reasons, which is summarizing a super high level in terms of the right timing, the right technologies, and the market. So starting with timing, at this point, the energy transition is the biggest challenge and opportunity, potentially of our lifetimes as we move towards net zero. And I think what we are seeing to decarbonize, to really actually achieve net zero by 2050, there are certain sectors, certain hard-to-abate sectors, where we can't really get there without hydrogen being a part of the road. And hydrogen in all its forms, including ammonia, and I'll come back to that because that's another area I'm excited by. And then with government push, with regulations, with rapid growth in certain technology and breakthroughs in hydrogen technologies, electrolyzer technology, I think the timing is just right now. And then going on to my second point around technology, we are seeing a lot of innovation in technology. And electrolyzers have existed for a while. We studied about it in secondary school. But we are seeing a lot of invention and breakthroughs which can enable potential scaling up at a cost-effective scale, which will ultimately bring it to the same cost as fossil fuels, which is where hydrogen needs to get. But alongside that, I'm also seeing a lot of innovation in terms of business models, in terms of creating a more modular solution for hydrogen, which also address some of the concerns around storage and transportation. So I think there's a lot of innovation happening across electrolyzer technology, but also across the supply chain, which again makes me really excited about the market coming together. And then going to the markets, I think hydrogen is what I like to call platform technology, which has applications across a range of markets. So for example, in terms of decarbonizing industries, hard-to-abate sectors like steel and cement production, demand and response, domestic heat, ground transport, air transport, maritime, shipping. You see now my point. The market opportunity is huge. It's expected to be $1 trillion market. And from an investor point of view, let's say someone's able to capture 1% of that, that's 10 billion. Let's say we capture 0.1% of that, that's 1 billion. So I think it's worth pursuing. So for those reasons, I'm very excited about hydrogen, but also looking forward to discussing it further.
Great, we're all in.
That's brilliant, and actually you touched upon the point of like the economic opportunity, and I think this is an exciting time for the UK as well, like in a global perspective, but even from a UK perspective, that they want to grow like until 2030, they see a growth of 12,000 jobs just in hydrogen, another 11 billion. So, however, there's a lot of like, and you touched upon a little bit like addressing the key kind of market challenges and some investment challenges related to cost, related to infrastructure, related to renewable energy integration that will be vital in order to get that full potential and to get unlocked those kind of billions and even trillions. So according to you, Louisa, what are those kind of a key market, financial, operational challenges that you foresee doesn't allow that potential to unlock that investment, the hydrogen economy investment opportunity?
And I think across those kind of three areas, so when we think about the market, hydrogen's not new. In fact, it's been with us a long time. I think we had the first combustion engine in the 1900s. So we're not new to hydrogen, and obviously we're not new to less clean forms of hydrogen. But that is the starting constraint. We have a market where hydrogen is reasonably cheap, not green, but it's being built where it's needed, so co-located with industrial users. And in order for hydrogen to move on and for us to fully capture the value in the market, we've got to grow the national infrastructure alongside the supply and demand. This is the complex bit about the chicken and egg, and the infrastructure planning takes so much longer. So that is the challenge, I think, for the evolution of the market, is bringing the infrastructure alongside some of the innovation in the business models, and I'm really looking forward to hearing your thoughts about that, alongside some really exciting breakthrough technologies that we're seeing, especially in the electrolyzer space, that are really going to push the efficiency of electrolyzer units a bit harder. But at the moment, we have a market where we've just got hydrogen production co-located next to use, and that isn't highly scalable. On the financial side, it's a good and bad thing. I've got a particular view of this, but obviously all developers, hydrogen developers at the moment, need to get access to government subsidies. It's the only game in town to close the gap on the green premium. But that doesn't help the innovators with different supply models. It doesn't help the innovators looking to close those gaps with more modular or mobile production of hydrogen and at less than sizable scale. So we're sort of pushing the market into a uniform direction that I don't think is really helpful to create that kind of more dynamic market that we need. And particularly with the hydrogen business production model, it's really shut out the market makers. And for me, this is the biggest challenge to moving to a commodity market. We've excluded them from being an off-taker under the contract. So if we're going to lock in a market and we're envisaging, hydrogen allocation rounds to 2029, where investors are only going to chase those winners under HR rounds, then that's quite challenging, I think, because it spurs the market, but it creates an entirely different market distortion. And I think in the last session, we all recognised the problems at an operational level, the kind of physical transport and storage of hydrogen, and really kind of trying to get that scaled up. It's really difficult. So, yeah, we really need much more mechanisms, I think, to accelerate that. Again, it's good it's coming. The allocation round's coming, I think, next year to try and support transport and storage. And I think, government are looking to earmark at least 2 major storage projects. But, yeah, that's still slowing us down. And I think, lastly, I'd just say the kind of macro environment is really hurting. Higher interest rates means the cost of capital has really pushed most projects up by a third. It really hurts. Yeah, we're kind of balancing a nascent market with kind of macro environment as well, where we really need to kind of push on with the costs.
So agree with all of that. So just to add to that, so starting with markets, I think a couple of the challenges we're facing, one is around the fact that compared to solar wind, for example, which in a way fit into an existing market, hydrogen is different. It's not an electron, it's a molecule. So the market around that needs to be created. What role hydrogen plays in the different, while the market opportunity is huge, what role it plays, where it'll have to capture the biggest opportunity, that again hasn't quite been defined yet. So I think what that needs is private players exploring different areas, but then also a bit of a public-private partnership with government leading the charge in terms of a national, regional hydrogen strategy, and then also having a bit of a sandbox to play in to understand what the different innovative solutions could be where it plugs in. Another aspect around it is the scalability. So we are seeing electrolyzer projects in the scale of megawatts, but scalability at a cost is something that needs to be addressed. And then similar to what Louisa said, it was the same with solar, right? It was the same with batteries, and we've seen those curves go down. So again, the technology isn't brand new. We have brilliant people. We have, with the right funding, it will go down. On the financing side, I think with hydrogen, it can be quite capital intensive and asset heavy. So there is a question about who finances it. One of the debates we keep having is this the right model for VC? Who comes in where? And it's more of a debate more around first of a kind projects in general. Yeah. So I think we need to talk about the different financing mechanisms, and I think that also depends on what stage of the technology is across the technology readiness level, which I can talk a bit more about. As an engineer, I tend to think of it that way. So at earlier stages would differ a little bit more from when you're scaling it up. But I think the other thing that could be useful is also to think about it from the point of view of what aspect is first of kind versus what isn't actually, and learning from adjacent industries. So for example, one of my learnings from experience in the EV sector is when the same conversation was being having around deploying electric vehicle chargers was the risk of stranded assets as the technologies and the markets develop. And I think while that's potentially a challenge with hydrogen, it's also an opportunity in terms of understanding are there innovative mechanisms which could help de-risk that aspect a little bit. And then finally, on the operational side, I think one of the bigger challenges is around the storage and transportation of hydrogen. And I think, or based on what I'm seeing, there are certain areas where I think the use case is here and now. So for example, two areas. So one is steel and cement production, so hard-to-abate sectors, where co-locating hydrogen can help to a large extent mitigate or reduce some of those concerns, but also prove out the business case. Similarly, with shipping, where maritime, again, I think there's an opportunity for hydrogen to help decarbonize the sector where most of the other solutions don't fit in, but potentially also be that global mobile source of hydrogen. I don't know. So I feel those are the three areas where I see the challenges, but also potential opportunities.
Brilliant, thank you. I will grasp one thing that you mentioned, and I'm going to bring it to the next question, which is about the financial mechanism. So have you, or based on your perspective, and I'll start from you now, Rubina, what are the financing mechanisms to unlock that hydrogen investment in the UK? Do you see any kind of a de-risking kind of a mechanism that can become like appeal for new ventures to potential investors? Could you please elaborate on that?
Right. So currently, I don't think there exists a clear structure, but we're having those conversations in multiple different forums. My thinking is that we need different financing mechanisms at the different stages. I do think for hydrogen and technologies like these, we would need more of a blended financing mechanism, bringing both public and private money. But what that ratio is and who leads it would depend on the stage. So for example, TRL levels 1 to 4, when it's innovative new technology, still in the R&D phase, still about to come out of universities, labs, I think being led by grant funding can really help, as has been demonstrated in so many other cases, with a bit of support, again, from the private sector. And then I think then there's the next stage, which is TRL 4 to 6, which is when you're piloting it to really prove it out in the industrial, in the real world setting. And I think that's where bringing in corporates, bringing in the private, bringing public-private partnership, I think can really help. So both to really bring in those ultimate customers or acquisition targets for such technologies, working and then having a bit of government support as well to then attract more private sector funding, de-risk it a bit, but really basically really having those feasibility projects to demonstrate the technology to de-risk it a bit. And then we go to TRL 8 and beyond when the technology's been proven, it's been piloted, but now it's about scaling it up and deploying it. And I think at that stage, potentially SPVs can become really helpful to, again, bring in the right players. And finally, I think for a technology like this, you just need to have a bit of cross-sector collaboration, again, which is what I would say for any first of its kind project. So bringing in the right players across industry, across investments, across R&D and startups and the government to create the right funding mechanisms and create the right blend of financing to go at each stage. At this point, I mean, there is VC money going into hydrogen. There are concerns, and it depends on the fund strategy. It depends on the risk-return profile, the holding period, but there is. I'm not seeing as much in terms of lending and debt finance. I think that needs to be developed a bit more. And at the same time, from a government grant support point of view, again, subsidies similarly for solar, for coal, for fossil fuels, that was done. I think that is quite important. And basically having coordinated approach to the extent possible could really help create a clear strategy in terms of how it's financed at through the different stages, and showing clear paths to attractive returns, I think could really help accelerate what I think is an inevitable hydrogen economy. So, yeah.
Okay, brilliant. Louisa, what are your
thoughts? I love all that. I suppose where I get a little bit stuck is, I think, thinking of hydrogen either as an energy source or as a fuel, and I'm more on the fuel side. So what I don't want to see happen, which is happening with the government, this is where, we're in this catch-22. We need revenue support because we've got to close the gap. But if we're going to create a market where we're locking in secure point-to-point offtake with credit-worthy counterparties, not many people can play in that market, right? That isn't going to get us scale. So that for me is, we're in a catch-22. We need that, but if we're going to just, tell investors that we're going to chase that, so that's challenging. But we do need government subsidy. But I think we need some different forms of government subsidy. The debt markets aren't ready, although I was really excited to see UKIP step up as part of one of the HR1 winners to get behind GeoPura and their hydrogen power units. Now, I'm not surprised. That's a quite sexy club of investors that are in there. And they've already got customers like the MOD, BBC, and a few others, and National Grid, which really helps. So back to the kind of strength of the offtake. But look, there is some commitment there. There's some missing signalling. I think UKIP and others really need to signal that they're prepared to finance and what debt funding level they're prepared to come in at. And how that works. So yeah, we need to do more there. In the blended financing models, I've tried this so many times over so many years. Why can't the government get the guarantee out? It exists. UKIP have it as well. Oh my God, just put the guarantee on the table, close the gap, let's move on. That will help us get scale, and with different scale and sizes. What I'm really excited though is, again, back to market making, which I think I'm really keen to open up the flexibility of the market, is some of the business model innovation. I don't think anyone's mentioned it today, but I did pick up, it's been in pilot phase, and it was one of the most exciting things I've seen, is the book and claim that's been piloted in the aviation sector. Now what this does, and back to creating the market, is it allows essentially one entity to essentially pay the green premium and have the supply at the fossil fuel price to a user. And that's really exciting, because we're trying to approximate some of the activity that has been going on, for example, in the voluntary carbon markets for advancing the acceleration of carbon removals and DAC and other things like that. So we found the same carbon credit mechanism to close the back gap, and we could do it for hydrogen. Yeah. And it's a really, really exciting system, and I'd love to see us do a pilot, particularly in marine, but anywhere in hydrogen's fine. I'm not. The other thing, look at Germany, love it. I love this auction process, H2 Global. That's really exciting. Again, you've got the government underpinning a 10-year contract and then selling to the market and getting the highest price on short-term buyers. Let's look at that, please. I think that really opens the market. And, we're really looking, some of the innovators that are in the room today, but, hydrogen as a service, we've got to open the market for them. And allow these business models. And the last thing I'd say is, yes, we do need much more grant funding, but we know that collaboration's key. So there isn't going to be a single startup that's going to change the rules of the game. So it's got to be done in a way that things are joined up, with corporates, with other entities to kind of really genuinely move them down the path to market. So yeah, they're my thoughts.
Thank you. Conscious of the time, I would really want to take your quick views, if possible, of how to make the hydrogen economy more appealing and less risky as an investment. If you can do it in 30 seconds, that would be great. I know it's a lot less than expected, but I can see that there is a time restriction. But
do you want to go first, or
give me your quick thoughts, if that's okay.
Okay, super quickly, cross-sector collaboration and public-private partnerships, really invest in feasibility projects to demonstrate it and come up with a few clear financing mechanisms.
Okay, for me, enable lower cost of power, bring the market in. Bring forward national infrastructure business models for transport and storage, accelerate planning applications and permitting processes. We're doing it in Europe, for God's sake, get it done here. Prioritise solar wind projects linked to hydrogen production. We could put them first in the queue. Stronger policy, please more ambitious targets. Everyone says 20 gigawatts is the minimum. Bloody hell, get the signalling right. Collaboration's critical. Someone talked about it earlier. Let's raise more awareness, please, out there in the market. Hydrogen's brilliant. We need it. It's the only game in town for a net zero future, and stop the negative talk about costs. The economics are here. If someone isn't tracking China, we're nearly at price parity with diesel. That's it.
Thank you so much. Thank you for your contributions today.